Sticky inflation and slowing economic growth have been a rough 1-2 punch for markets during the first half of 2022. As we discussed in a video segment in early June, unlike many prior sell-offs, the current one has been unique because of the simultaneous weakness in both stocks and bonds. Compounding the pain for investors has been just the sheer magnitude of the weakness, most notably within bonds. The difficulties investors have faced over the last 6 months relative to history is pretty easy to see when we rank returns historically. In this analysis, we looked at consecutive quarterly returns or 6-month windows starting in 1976 for the S&P 500, the top graph, US bonds, the middle portion, and a 60-40 portfolio using the 2 indexes, the bottom portion. The black bars represent the 2022 year-to-date returns through June 24th, and it's easy to see why this has been such a frustrating period for investors. Returns for stocks, bonds, or a portfolio combining the two have rarely been worse over a 6-month time frame. Other than areas like commodities or energy stocks and niche strategies like trend-following managed futures, 2 areas I'm very happy to say we've been allocated to, there really haven't been many places for investors to quote-unquote hide. There have, however, been plenty of places for investors to get tripped up. Things like SPACs, some high-flying tech stocks, and cryptocurrencies, areas we've thankfully had little to no exposure to. None of this, of course, makes this any easier or better, but I think it's always helpful to step back and try to put things in perspective. Do our best to remove, or for a short period of time, put aside some of the fear and frustration that periods like this can cause, and focus in on the numbers. If we just focus on the numbers, we may start to see potential opportunities amidst the market mayhem. Investors who have worked with us over the years can probably guess at what I'm about to say. Difficult, volatile markets create opportunities, but we have to be able to look past the current environment in order to see them. Opportunities to do things like tax loss harvest, something we recently wrote an article on, or to reposition portfolios to take advantage of valuations that have become increasingly more compelling as markets have fallen. To that last point, I hope you'll stay tuned as we switch gears a bit to talk about what comes next for bonds and then stocks.